This week, Learning Saturday, we have 3 exciting webinars lined up for you. At 10 a.m., we have the new fixed income playbook, Strategist for a falling interest rate cycle. At 11 a.m., we have Zero to Investor, how to start investing from our very first salary. And finally, we have Anchor Awaits, India's port and logistics sector. To join this webinar, kindly click the registration link in the description.
Time to do the review of the US boring stocks portfolio. I did a rejig last month, and here's the new lineup of stocks. The new lineup of stocks are Crocs, Uber, Amazon, Alphabet, Apple, Pepsi, Kava, Meta, Netflix, and Costco. The month for the US boring stocks portfolio curated by me has not been so great. If you invested $1,000 in the US boring stocks portfolio on the 1st of November, it's worth $996. So we have lost 0.4% in this month. But the consolation is we have definitely done better than the NASDAQ index, where if you invested $1,000 in the NASDAQ, you are now worth $979, which means you lost 2% in a month. So relatively, the NASDAQ has been weak during the month of November versus our US boring stocks index. But when you compare our performance with the MSCI World Index, the MSCI World Index is in the green. $1,000 became $1,001.62, delivering 0.16%, a very thin, slender positive return. So we have not done as well as the MSCI World Index. Now, what happened in this portfolio? We rebalanced and we left $113.63 in each of these 10 stocks. And let's see which are the stocks that did very badly first. The stocks which are in the negative, starting with Uber minus 12.1%, and then you have Amazon minus 8.18%, and then you have Kava minus 6.27% in November, and then you have Netflix minus 2.21%, and lastly you have Costco minus 1.56%. So we have 5 out of 10 stocks in the negative, and ending in positive. During November, we have 5 stocks, Crocs with 4.71%, followed by Alphabet, which is clearly the outlier stock of the month, 12.67%, Apple 3.74%, Pepsi 3.58%, and Meta 1.61%. So 5 stocks did very well, 5 stocks did very badly. You had one company, Alphabet, giving plus 12.67%, while Uber gave minus 12.21%. So kind of everything cancelled out, and we ended with a small minus of minus 0.41%. I made these changes in the month of November because I wanted to be more consumption oriented and more quality driven. We have bought these companies hoping that they will deliver growth going forward. Many of the companies we had are now out of this portfolio, 3 of them to be precise. We will approach this very carefully and cautiously, and we'll keep reviewing what happens in the US boring stocks index. This index is an experiment, a public one, through which I learn what is happening in the US market, whether I am able to identify businesses in the US market which can do reasonably well. I develop a better understanding of business in the US, which in turn may help me sharpen my understanding of business in India. And it's just 10 companies. I actually have a catchment of nearly 40 or 50 companies. But this is a very small sample through which we are doing this public learning. I continue to learn privately with a much larger sample size of companies, which we continue to track closely and learn from. The US Boring Stocks Index is more than an experiment. It's a learning exercise, and I'm happy that we are all doing this together. Do share your comments in the comment section, and let's continue learning together. Thank you for watching this video.